The median age of first-time U.S. home buyers is 38, which is a data point that's kind of frightening because in 1992 it was 28.
Most young people are looking to buy homes, mostly live and build a lifestyle around it, and not really looking at homes as a long-term investment or a savings vehicle as the older generations did. And we came across this very interesting legal financial instrument called HEI, Home Equity Investment, that allows this product to be.
I think it was something to the tune of MicroStrategy did it with cash, you can do it with your house.
Joe Consorti is a seasoned market analyst and serves as head of growth at Horizon. Smeet, on the other hand, is the company's co-founder as well as a prominent entrepreneur and builder in the Bitcoin space.
With a career deeply rooted in the financial industry, together they are driving innovation in structured Bitcoin credit, pushing the boundaries of Bitcoin adoption in traditional finance.
Home ownership and home equity represents the largest asset in a person's portfolio, but by the same token, it also represents an insane amount of monthly expenses and upkeep just to make sure that that asset remains an asset, not a liability. What companies today are doing is they're building financial tools that will allow Bitcoin to be the rails of credit markets in the future, of both credit and also longer-term fixed income markets. There are no extremely efficient ways to mobilize that capital from point A, your home, to point B, Bitcoin, without any material lifestyle changes. Right? There are HELOCs, there are reverse mortgages, what have you, but no clean way of just basically transforming one into the other with no interest, no monthly payments, no debt, essentially no new debt. And so essentially, that's ultimately what Horizon is aiming to do.
Hey guys, welcome back to Less Noise, More Signal. Today I have a first, for me at least, not a world's first, but a first. I have two guests on the show. I'm happy to be joined by Joe Consorti and Smeet. Yeah, happy to have you guys with us today.
Likewise, thanks so much for having us.
Thanks for inviting.
Yes, I want to talk to you guys about the new, very interesting product that you have. And usually I'm not the one really talking about products in that sort of outright fashion, but I was just really intrigued by what I've seen online. And so that's why I wanted to bring you on to more in detail understand what Horizon is actually doing. But maybe before we dive into this, maybe if you guys could just again quickly introduce yourself. I think you, Joe, have been on the show before, but maybe just quickly, and then also afterwards meet just for the listeners so they get some background on you guys.
Of course. So my name is Joe Consorti. I'm the head of growth at Horizon and Theia. Also over at the Bitcoin layer, kind of behind the scenes. I'm a market analyst by trade. Got picked up by Smeet and the team to do content work for Theia. That became full-time. And as we're scaling that business, we've now built out a brand new product underneath Theia as well called Horizon. Yeah, no, it's a fantastic time to be building new products. Bitcoin's, over $2 trillion in size, number six largest asset in the world. Nobody's talking about it. So it really feels like right time, right place here. So I'm excited to chat about it today.
Cool, yeah.
I'm Smeet Bhatt, one of the co-founders of Horizon and Theia. We spent most of my life in financial services industry. Started my career at Deutsche Bank trading FX and rates. After that, have built several startups. I was also involved with a venture capital firm called IDG Ventures, investing in early stage fintech companies and enterprise software. Got into Bitcoin in late 2010s, 2018, 2019 to be precise, and then launched Theia, as a full-time business in 2022. Happy to talk about our journeys and the products that we have built.
Nice. Yeah, very interesting. Well, yeah, I want to get into the products for sure, as I said, but maybe just to start off, I mean, what I find so interesting about, as you, Joe, said as well, it's really the right time right now to build out these products. And because that's a criticism I still usually encounter, when I talk to people outside of the Bitcoin sphere or maybe just adjacent to it. They're asking me, well, you have this Bitcoin, or people have this Bitcoin. What can I do with it? I can just buy and sell. That's not that much that I can do. And now it feels like it's really the time where borrowing against Bitcoin, for example, is really the talk of the town. And now other things, like, for example, we had this news just recently with Bitcoin in the US, now supposedly, I think, or actually for real, being accepted as collateral for mortgages. And I think this is coming, right? So this is huge news in that sense. So maybe if you guys could comment on this, maybe Joe, what do you think of this news?
Absolutely. So Basically, the news in the United States is a little different. It's essentially that Bitcoin will be considered an asset during qualifying for a mortgage. So not necessarily being accepted as collateral yet, but certainly one step in that direction. And ultimately, Bitcoin's monetary properties allow it to be pristine collateral, right? Meaning the collateral that every lender all around the world wants to use, they want to write loans against. Because it's 24/7, it's now highly liquid, 365 days a year, you can immediately call it in. And so Bitcoin's monetary properties have basically always allowed it to become this, but for the longest time, because of size and the way that the market treated it with its cross-asset correlations, it's been treated, and it still is treated like a risk asset, right? It trades with a very high beta to the NASDAQ. And so ultimately, what companies today are doing is they're building financial tools that will allow Bitcoin to be the rails of credit markets in the future, of both credit and also longer term fixed income markets. And so, you see all these different instruments from strategy being created. Now they have Strife, Strike, Stride, and Stretch. So 4, along with their common stock. And really that's siphoning trapped capital that's mandated to be in equity and fixed income markets into Bitcoin, right? There's about 97% of institutional capital, some $65 trillion in credit in the United States and $30 trillion in equities. That's mandated capital, right? And so strategy is basically built a way for that capital to flow into Bitcoin. And it's really the talk of the town. I mean, Stretch was oversubscribed to the tune of over 4x what it was. I made a video about how Stretch was basically, the next big thing, right? This thing is going to be insane because it's tapping this market that is yield starved in real terms. And people called me a moron. They said, well, it's a $7 trillion market, very risk averse, yada, 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 4 times oversubscribed. The most successful IPO strategies ever done. So clearly there's some merit to what they're doing. And there's a lot of demand from these pools of capital that are just trapped. They have no access. They're mandated to hold these types of instruments. So then you look at the other pools of capital in the world that are kind of ripe for tapping into this. And I think Smeet, can add some color here as well. But really, real estate is the largest single global market at $370 trillion in size. This is an estimate from Jesse Myers at Croesus on X. He writes once in a species.com. The total global asset value is $1 quadrillion. So, many people, I'd wager more than 50% of the world population didn't know the number quadrillion existed, but here we are. And real estate is the single largest market in that. It's almost double the size of the global bond market. And so really that industry, that global asset market is ripe for one of these bridges to be built. And we'll talk a little bit more about why, but essentially that is why it is the perfect time to build these instruments. There's an insane amount of demand from these cohorts, and now that Bitcoin's a $2 trillion asset, it is more than 12 years of price experience under its belt. It's really ripe that these types of tools come to the fore, and that's kind of what we're looking to build at Horizon. We're looking to build that bridge.
What if you could lower your tax bill and stack Bitcoin at the same time? Well, by mining Bitcoin with Blockware, you can. New tax guidelines from the Big Beautiful Bill allow American miners to write off 100% of the cost of their mining hardware in a single tax year. That's right, a 100% write-off. If you have $100,000 in capital gains or income, you can purchase $100,000 worth of miners and offset it entirely. Blockware's mining as a service solution enables you to start mining Bitcoin right now without lifting a finger. Blockware handles everything from securing the miners to sourcing low-cost power to configuring the mining pool. They do it all. You get to stack Bitcoin at a discount every single day, while also saving big time when tax season hits. Get started today by going to mining.blockwaresolutions.com/LNMS. Again, that's mining.blockwaresolutions.com/LNMS. Hey guys, I just wanted to let you know I published a new book, The Bitcoin Enlightenment, co-written with my buddy Daniel and none other than Mexican billionaire Ricardo Salinas. It's a deep dive into the monetary system and its future. In it, we make the type of connections that go beyond what you'll hear from your average Bitcoiner, MMT advocate, or macro pundit. So grab your copy on Amazon today. You'll find the link in the show notes. And now on to today's show. Yeah, I see. Do you want to add anything, Smeet, at this point in time already?
Yeah, I think so. On the original point about like it being involved in the mortgage sort of ecosystem, I think the Overton window is shifting around Bitcoin. You look at, the policy side of things, you look at mainstream media's coverage on this thing has suddenly shifted. I'm not sure if you came across one of the coverage from New York Times. They ended up covering Horizon as part of the news story that allowed Bitcoin to be part of this sort of mortgage collateralization. It's almost surprising that New York Times would almost write a positive article around Bitcoin and Bitcoin being part of someone's sort of mortgage stack. But I think the Overton window is certainly shifting, and I think it's about time. I mean, people are finally realizing that Bitcoin is here to stay. Bitcoin is becoming qualified as a pristine collateral, and this is only a beginning. And I think Horizon is sort of building in the right space. We don't exactly sort of build in the mortgage industry, but obviously it's an overlapping ecosystem and kind of tap into the same investor pool.
Mm, mm. No, that's for sure. Yeah, that's very interesting to see. And I mean, Joe brought up a strategy, formerly MicroStrategy, as somebody like Saylor has really done the great job of showing the world that we can tap into all these types of different pools of capital, and we can do it through sort of interesting and smart ways of taking up leverage in that sense, and I mean, many people, when I talk to them, also like retailers, other private people, they're looking at strategy like really enviously, and they're like, wow, I'd like to do this as well, but obviously they're a big company. I mean, they have access to all these different pools of capital and stuff, they're well connected. But how it feels like when I read about what Horizon now is sort of doing, you are trying to make this accessible, like the strategy at least, to everyday people, with a house, which is sort of their piggy bank that they store a lot of value in. So that's what I find so interesting. So if you could maybe elaborate on what Horizon is actually doing and how it is sort of enabling the everyday person to follow the MicroStrategy playbook, that would be great. Yeah,
You know,
maybe Joe, if you want to elaborate
All
first.
right. Wonderful. Perfect. So yeah, I mean, it's kind of funny, that you mentioned that, because one of the basically the first tweet that I ever did from my personal account was bringing this analogy together. I think it was something to the tune of MicroStrategy did it with cash, you can do it with your house. And obviously there's too much room for interpretation there. And so some people thought that we were building a company that allowed people to X lever long their home equity, which is not the case. Ultimately, like Strategy and Saylor have come up with this term intelligent leverage, right? Primarily meaning, I mean, you could interpret it a number of different ways, but I had Joe Burnett on my podcast yesterday, and we kind of defined it as leverage that has low or no Bitcoin price liquidation risk associated with it, right? And that has an extremely low coupon. And so when we talk about that first aspect, low or no Bitcoin price liquidation risk, that's essentially what Strategy is doing in order to accumulate Bitcoin, right? And they just so happen to do it in an oversubscribed fashion that makes it so it's also at a very low coupon. And so ultimately, Strategy started out as a zombie company. They were relatively small. And then over time, they scaled and scaled and scaled and scaled. And now they're doing these purchases that are 5,000 Bitcoin at a time, 6,000 Bitcoin at a time. Meanwhile, you have most Americans who don't own any Bitcoin whatsoever, right? The majority of Americans do not have any Bitcoin exposure whatsoever. And with unit bias obviously being a very real thing, Bitcoin looking over my shoulder, $115,000, it's at a bit of a discount today. It seems more out of reach than ever for the everyday homeowner. But at the same time, home prices, the median home sale price is larger than it's ever been, right? And so people's net equity on paper, right, their property value less their mortgage, is really higher than it's ever been if you just take a look at the numbers. And so ultimately, it's trying to bridge these two worlds, right? People have FOMO, they have envy, they're looking at Strategy and what they're doing, but they're also seeing the Bitcoin price run away from them. But ultimately, many people are house poor, right? Meanwhile, they're sitting on this, this property, which has a great deal of equity in it, but there are no extremely efficient ways to mobilize that capital from point A, your home, to point B, Bitcoin, without any material lifestyle changes, right? There are HELOCs, there are reverse mortgages, what have you, but no clean way of just basically transforming one into the other with no interest, no monthly payments, no debt, essentially no new debt. And so essentially, that's ultimately what Horizon is aiming to do, to allow homeowners who qualify in qualifying states and with a qualifying LTV to be able to tap their home equity to get tax-free cash for the purposes of buying Bitcoin. Ultimately, when we talk about a Bitcoin treasury, we talk about it generally in the context of public companies. But ultimately, before this trend was extremely popular, a Bitcoin treasury was your own personal Bitcoin holdings. And so really, Horizon is an extremely efficient and innovative way for people to build their personal Bitcoin treasury or their family Bitcoin treasury, either begin building it or continue building it using capital that they've already put into their house. So essentially, that's what I was getting at with that analogy, right? Smeet, I don't know if you have any other color there.
Yeah, no, I think the whole idea here is essentially helping homeowners to diversify out of their home equity position that they're growing into. If you look at home equity value since 2008 crisis, it has gone almost 4x in the US.
Yeah.
So homeowners are sitting at about $35 trillion worth of home equity. That's obviously illiquid, immobile. You can't do much with it. And as Joe mentioned, people feel wealthy on paper because of their home equity, but cash poor. And clearly, like for most homeowners, stacking one Bitcoin is out of reach. So Horizon essentially allows them to like sort of part ways with some of their home equity. All you're doing is essentially entering into a financial contract where you're selling a future value of your home in return for cash today that you go and buy Bitcoin with. So as long as you believe in Bitcoin as a long-term savings asset, as long as you believe that Bitcoin is by and large going to outperform your home equity growth, this is a net sort of positive trade from homeowners' perspective. And yeah, we are facilitating this. We have been building in the Bitcoin space for several years now, so we kind of understand the mindset and the demand that some of these homeowners have. And we came across this very interesting legal financial instrument called HEI, Home Equity Investment, that allows this product to be built where there is no monthly payments. This is not a kind of a debt where it impacts someone's credit scores and stuff like that. So no monthly payment. You continue living in your home. You get tax-free cash upfront to buy Bitcoin. So it's a great deal. And yeah, this is what we've been building at Horizon.
No, because taking a step back here, that's exactly what I found so interesting about this. It's not like I've talked to friends about mobilizing your home's value, to sort of buy more Bitcoin. But usually it's then, okay, you try to mortgage your house, and then obviously you get a mortgage. You can maybe even use it to buy Bitcoin, but then obviously you have the monthly payments, you have the interest rate and stuff. And here, it's not the case, right? It's really accessing your home's equity, and that's why it's different, and that's really enabled by this thing that you call the home equity investments, which is probably is this a special legal vehicle in the US that exists, or why can we tap into this home equity investment thing, so to say? What's special about it?
It is a somewhat specialized sort of legal structure that has been it's not new per se. This has been around for about 25 years. So some of the older generation HEI companies were started in like late 90s, early 2000s. This is still a smaller market than the traditional HELOC market where you're making monthly payments, which is a kind of a debt. HEIs are geared more towards people who want immediate cash without having to sort of, make monthly payments and things like that. Traditional HEI companies are not focused at investment diversification. Traditional HEI companies serve a segment of the market that needs cash for some urgent family needs, healthcare needs, sending the kids to like college, education, things like that. In our case, we are very sort of focused at helping homeowners diversify their home equity gains into Bitcoin. So it's a simple, at a high level, it's a simple equity swap where you are essentially selling a part of your future value of your home for cash today. You use that cash to buy Bitcoin. Effectively, you still continue living in your home. You still end up owning 80 to 90% of your home. There is no way for the financing partner or the provider in this case to have any kind of foreclosure or any kind of operational sort of rights on your home. So you continue to have the comfort of living in your home without any disruption to your lifestyle. No impact on your credit scores, no impact on your monthly cash flows. All you do is you buy basically Bitcoin by selling a future value of your home. So it is a somewhat special sort of instrument, but it is not new to the extent that we are not really creating a new legal structure to go in the market with. So it's a fairly sophisticated, well-tested, well-regulated space for the most of the US states.
Yes, I see. Very, very interesting. And Who do you imagine the customers to be? Like the ideal customer, obviously homeowners. But then I'm asking the question because, like, especially here in Europe, in Switzerland, I mean, the homeowners are usually the parents, 50, 60, 70 years old. And the younger people, they don't own any houses just because, like, house prices have gone so insanely high, so they cannot afford. How does this work? Will it be like older people who might even be like, that their kids are approaching them like, hey, I like this Bitcoin thing, let's do this together with my parents? Or how do you picture this happening, sort of?
Yeah, so that is actually one of the biggest use case where younger people come across Horizon, you come across this product, and they kind of go and convince their parents and grandparents to enter into this contract. So that's one of the largest use cases. You are right to the extent that yes, this product is built towards prime homeowners, people who are technically homeowners who happen to be slightly older generation people. But we think of this as a very interesting way in which parents and grandparents can actually sort of help their younger generations get into Bitcoin early on while they continue living in their home. So it's not as if that the parents, the
Mhm.
grandparents have to move out of the house. They can continue living in the house for as long as they want. All they're doing is, basically selling the future value of their home to buy Bitcoin for their younger sort of, kids and grandkids and things like that. Um, and then, as younger generation sort of kind of like climbs up the economic ladder and starts becoming homeowners, this becomes a very interesting way for them to like quickly diversify out of home equity, because most young people are looking to buy homes to mostly live and build a lifestyle around it, and not really looking at
Mhm.
homes as a long-term investment or a savings vehicle as the older generations did. We're already looking at like all-time high residential real estate prices. So to that extent, as far as our research says, most homeowners are not interested in looking at real estate from a investment point of view, but more from a lifestyle and family building point of view.
Mm. Mm. Yes, I see. I see. Yeah, maybe Joe, you can take me through a concrete example of this, like, because one question that I'm now having is like, where's the cash coming from? We're now keep on referencing this cash, there will be cash paid to you. You as a homeowner will give away some parts of your home equity value, future home equity value, but who's providing this cash? And then also, how does it work? Maybe a concrete example, if let's assume I have a home, 1 million in value now. What's my next step, so to say? Like,
Absolutely. So as far as where the cash comes from, at this point in time, we have a few preferred providers. The one we work with currently is Cornerstone Financing. Essentially, the name home equity investment that Smeet mentioned earlier, they are the home equity investor. And so essentially, they're looking to gain a financial interest, as Smeet mentioned the transaction earlier, in a fixed share of the future value of the home. And so that's essentially where the upfront tax-free cash comes from. Now, as far as a concrete example goes, I'm happy you asked this because we actually built a calculator. And so if anybody listening wants to go and check this out and plug in their property, even if you don't live in the States and you just want to see based on what your home value is, what this tool could potentially do for you if you did, you can go to joinhorizon.com/calculator, but I'll walk through it. So let's say, essentially, I'll explain this kind of front to back. Let's say you have $1 million home. Take the example you just gave. The median age of first-time U.S. home buyers is 38, which is a data point that's kind of frightening because in 1992 it was 28. But anyway, taking that data point, let's assume this homeowner who has a $1 million home, let's assume they have a close to 0 or 0% mortgage balance. In that case, Horizon would allow the homeowner to draw up to $216,973 in cash, right, for the purposes of buying Bitcoin. Now, essentially, in exchange for that, our preferred provider gets a commensurate share, as I mentioned earlier, in the future value of the home. Now, essentially, you can do whatever term limit you'd like with Horizon. One of the cool benefits of the product to this point, we've mentioned no new debt, no monthly payments, no interest charges. But we haven't mentioned another cool feature, which is kind of directly in line with the Bitcoin ethos, which is there are no term limits, right? So obviously, Bitcoiners have a very long time horizon. We have a very long time preference. It's actually a good name for the company because people say time horizon in the Bitcoin space quite often. So we are one half of that word. But essentially, whether you are doing this for an 8-year period or a 30-year period, you could do this for whatever term length you'd like. To set an example of a 15-year term period, right? About half the time of a 30-year mortgage, this is a homeowner who, let's say their kids are growing up, they want to put something away, they're 3 or 4 years old, they want to buy Bitcoin for them for their college fund or their long-term savings. Essentially, on day one, they have this $1 million home. They draw out that $216,973 in tax-free cash. They invested into Bitcoin at today's price. of about 115. Assuming a 3% home price appreciation, which is roughly the Case-Shiller national average, and a 20% Bitcoin compound annual growth rate, or a 20% average yearly growth rate, which is actually much lower than Bitcoin is doing currently. But to keep it conservative, essentially what you would end up with after that 15-year period, let's say you decided to settle up, you can do that voluntarily, or if you sell or refinance a home or do a title transfer, then the future Bitcoin value would be about $3.3 million, and your net investment returns in this illustrative scenario would be $2.563 million. So essentially that's the way that it works front to back. Ultimately, that's where the cash is coming from this home equity investor who is interested in getting a financial stake in the future value of the property. And of course, the homeowner who's interested in buying Bitcoin today. You combine those two things together using those assumptions. That's essentially what you end up with.
Okay, I see. Very interesting as well. But you mentioned there's no interest payments, no monthly payments. But when I enter into a home equity investment contract, I call it now, like, is there any upfront fees that I have to pay, transaction costs? I guess, like, maybe because there's a land register that maybe, at least that's how it would be in Switzerland. You need to be sort of be part of the land registry if you are a preferred provider. Like, how does that work? Is there any fees involved, Smeet?
Yeah. So to the extent of staying conservative, for the most contracts, the fees are under 3%, and these are all inclusive fees. This includes, title registration for the investor. This includes all the paperwork and the legal work that goes behind the contract, as well as the transaction fee of buying Bitcoin. So all inclusive fees on a conservative sort of side would be about 3% of the original value of the contract.
Paid by the homeowner upfront then? Is that like sort of
Paid by the homeowner upfront, or essentially taken out from the cash that they would get on day one. So there is an option of not doing it out of pocket, but effectively to the extent of 3% of the contract value.
Okay, interesting. Nice, yeah. And what if I wanted to early access this, as a homeowner? Can I do this anytime? And then on the other hand, the preferred provider, can it be pushed indefinitely, or where will he or they get the liquidity the latest, so to say, or the profit?
Yeah. So the current part that is structured allows you to have an indefinite term length, which by definition means that you can technically, end this contract in 2 years, 3 years, 4 years. We don't expect Bitcoiners to be terminating contract that early. We do expect this to have at least a 4 to 10 year time horizon for the most part. The way this, financing preferred provider gets, liquidity or capital is that they are working with a portfolio of different homes and homeowners. They are, disbursing cash with different sort of homeowners at a regular interval. And when we talk about the traditional HEI companies, a typical time to contract termination is about 4.5 to 5 years. So they're, working under an assumption that for the most part, most of their portfolio would be terminating the contract in about 5 years. On the Bitcoin side of things, it could be slightly longer, but they're willing to do that because, at the end of the day, they are essentially like disbursing cash in 2025 and then 2026 and 2027. So they are building a large portfolio of homes over which they hold some kind of a financial stake. And they believe that these homeowners are fairly sophisticated. They understand what Bitcoin is doing. They are getting into this with the purpose of holding and investing into a high growth asset. So they feel fairly comfortable with this kind of transaction structure. And there are no fees to terminate this early. So there is nothing like early termination or late termination. It's an indefinite contract. So technically you could get into it and like get out next year, but that would make you a Bitcoin trader and not a Bitcoin saver.
Yeah. No, I see. And in terms of the equity ownership percentage that I, as a homeowner, give away, is this sort of once defined in the contract and then it stays that way until the contract is settled again? Or is that dynamic as well? Because when I was on the website, Joe, and the articles that you sent me, there was like this sort of a way in that it increased, but only to up to a certain extent. And then if you guys could maybe explain this as well, how this works That would be helpful as well.
Yeah, so we'll talk in two parts. One is the current contract structure, and one what we would be building over time. The second piece is going to be like much more generic in nature. The current contract, the way it is structured, is that this preferred provider is fully getting the economics on their end from home equity. So for, let's say, in a 1 million home, let's say you diversify about 10% of that today, so $100,000. 10% is essentially sold. Because the preferred provider has no incentive or no stake in the Bitcoin growth or Bitcoin as a collateral, what they are gonna make economics is through home equity growth. To that extent, there is a fixed percentage of what they own. So the maximum they can own over the life of the home is 22.5%. So there is a multiple of 2.25, which makes their upper cap of the ownership as at 22.5%. The way the product works, it is a non-linear function. So the longer you hold, their share in the home technically goes down. So your cost of capital basically ends up going down if you hold this for, like, say, 8 years, 10 years, 12 years, 15 years. There are two different mechanisms in which this happens. There is an upper cap of how much they can hold stake in your home equity, which is 2.25 times the original contract value. And the second equation is that their overall value in the home will be capped at 13.99% annualized. So you know that your cost of capital is never going to be higher than 13.99%. Now, someone might say that's a fairly high cost of capital, which we don't really kind of argue against. But then you are essentially using this cash to invest in Bitcoin. So if you believe that Bitcoin is going to comfortably be 13.99% on an annualized rate, then this is a fairly strong transaction for you. If not, then this doesn't really make sense. So,
Joe, in terms of the risks, I think you've probably thought about them extensively as well. Like from the point of view of a homeowner, what is the risk here that's involved? I guess one that comes to mind is really if Bitcoin were not to outperform your house in value, then I guess you would be standing with a higher sort of debt to settle in the future with what you actually made on Bitcoin. Or is that the only sort of risk that's here, or are there any other risks, so to say?
So you said it quite well. Building off of what Smeet had said at the very tail end of his answer, which is if you as a homeowner believe Bitcoin will just continue doing what it's doing and you have that conviction that it will outpace your home, then ultimately at any point during the Horizon trade, for the most part, right, that Bitcoin maintains that growth percentage, right, then you're coming out in the clear. So the primary risk to the homeowner is that if you believe Bitcoin will not outpace your home in terms of annual growth or outpace that 12.99 cap that we have. Of course, over time, that cap trends down. Beginning year 8, if you annualize your total funding costs out, it begins actually declining. So take year 12, for example, it's lower than it was. If I go out to year 12 in front of me, because I still have the calculator, it's now 10.42% annualized, assuming this 3% of home price appreciation rate annually. If I go out to year 15, it's 8.9%. If I go out to year 20, it's 7.39%. And year 30, it's 5.91%. Again, assuming that 3% annual home price growth. And so really the main risk to the homeowner is that Bitcoin does not do well. And it cannot
what it's supposed to do.
This, exactly,
Yeah.
correct. And so if your conviction essentially is that Bitcoin will just continue doing what it has historically done, obviously keeping in mind that some years Bitcoin does go down and that will impact your overall average annual price appreciation, then that is the primary risk to the homeowner, of course. Obviously, the other risk to the homeowner is that, the home equity investor essentially has a stake in the future value of the property. What if my home does more than 3% a year, right? What if it does 4% or 5%? Smeeta mentioned that the 12.99% is an upper cap, which is quite nice. So if I go to year 10 as an example in my calculator, and I begin bumping up my home price appreciation from 3%, 3.5%, and then 4%, anything beyond 4% at year 10 in this illustrative example doesn't change the contract payoff whatsoever. If I go to 6% or 6.5% or 7% or 7.5% or 8%. And that's because that 12.99% annualized funding cost is capped. And so on the upside, to a certain degree, homeowners are capped from that risk that, let's say, all of a sudden, let's say a celebrity moves into your neighborhood or some other I suppose you could call it a white swan that causes your home value to just skyrocket into the stratosphere. But in those situations, and homeowners are protected to some extent on the upside. But those certainly
Uh-huh.
are the two risks. The first one being the more prominent and forward-facing risk, which is that Bitcoin just doesn't do what it's supposed to do. But if your conviction can override, that belief, and you believe Bitcoin will, outpace your home, as it likely has done over the last 12 years, as we mentioned, then that's essentially the trade.
Yeah. Yes, I see. Interesting. That's well explained. Maybe one last sort of worst case scenario that I would like to go through. Like, what happens if, for whatever reason, I, as a homeowner, can really not settle the investment contract? I'm not sure. Maybe I invested into Bitcoin, I fumbled my bag or whatever. I don't know. You just cannot settle. Is there an option that you could be living on the street all of a sudden, that the preferred provider may initiate a foreclosure at last resort, or will they just write down this contract to zero? Or, yeah, well, what is the worst case risk
So,
here?
given that this is not really a loan or structured as a debt, there is no real sort of mechanism through which the preferred provider can initiate a foreclosure. Now, if you, for other reasons, let's say lose your job or are not able to make your mortgage payments, and if your primary bank, which is, the first lien on
Mhm.
your home, if they initiate a foreclosure, then that's a different story. But the preferred provider as a second lien on your home, as well as this not being a debt, there is no real risk of this being initiated into a foreclosure. Now, there are some technicalities around this where, let's say, if you fail to make insurance payments, or if you actively not really manage your home and things like that,
Yeah.
that could really lead to some adverse like legal outcomes. But the risk of foreclosure, as we colloquially understand in terms of mortgage, doesn't really exist in this contract, because essentially it's an equity swap at the end of the day. So even if the home value kind of goes down, from the preferred provider's math point of view, they're still making some kind of a positive return on top of it because of the 2.25 multiple that we initially spoke about, right?
Mm.
So as long as your initial contract amount times 2.25 goes below the initial contract, that's when they start losing money. And to that extent, there are no real sort of ways for them to do a foreclosure in a traditional sense. Only if you end up sort of being foreclosed by your primary mortgage provider, that's a very different story. But Horizon or Horizon's partners can't do it.
And
Okay.
one thing I'll add here really quick is that when I mentioned intelligent leverage earlier, when you think of leverage, when it comes to Bitcoin, you generally think, what's my liquidation price? You hear leverage, you think FTX, you think BitMEX, you think 100x, long in the perpetual futures market. With Horizon, there's no price related Bitcoin liquidation at all. No price related liquidation level, right? And so essentially, pair that with a no term limit structure. Let's say you're a homeowner, right? No term limits in the contract, but in your head, you and your husband or you and your wife agree, all right, we're going to do this for 10 years and then we're going to see where we are and we're going to sell and we're going to move somewhere else. And that'll close up the Horizon deal. Let's say after 10 years, during year 9, from year 9 through year 10, something happens to Bitcoin, right? It does its usual Bitcoin thing where it falls 25% in a year, or 30 or
Mm.
40 or 50. You are not forced to settle. You can ride that out. And furthermore, you won't get liquidated from your Bitcoin because it's entirely yours. It's not held as collateral. There's no price liquidation level. And so really pair those two things together and it's built for long-term Bitcoin holders. So that's one other thing I wanted to add because we were on the topic.
Yeah, exactly. And that's a very interesting and important point because, like, that's what I heard Michael Saylor be adamant about in another podcast. I thought it was with Saifedean, where he actually said, well, he's not really fond of borrowing against his Bitcoin just because, like, Bitcoin is being marked to market by banks and everyone. And then you have exactly the risk with something which can be still as volatile as Bitcoin sometimes is. If you are marked to market on your assets like Bitcoin, then you run the risk of exactly what you just described. You can actually lose your Bitcoin. And that's why many people, like people who own Bitcoin nowadays, colleagues of mine, people that I talk to, they're like, I would love to borrow against Bitcoin. I really see the case, but there's always the risk that I can lose my Bitcoin in the end. And that would be an even worse scenario, so to say. But in that case, as you just described, this is not really a problem or a thing that you have to worry about, right? So that's certainly very interesting indeed. You said about self-custody Bitcoin. Now, how does this work? I mean, and I think this is also where you guys at Horizon then come in, like can I self-custody my Bitcoin? Are you guys helping with this, or how does that work? And then also maybe my question, where do you guys earn in all of this?
Yeah. So with the current structure, you are able to self-custody your Bitcoin. You can self-custody with any platform you choose. Obviously, we have an offering called Thea, which is one of the world's sort of foremost robust multi-sig offering. So if you continue to custody with us, we can help you with that. But you're feel free to custody your Bitcoin as in, however you like. How do we make money? At this point of time, we primarily make money through, the origination fees and the transaction fees at the upfront. I did mention earlier that we will be creating a different product at the end of the day, which will have some kind of Bitcoin being part of the collateral structure. Again, not from a liquidation point of view, but just to lower the cost of capital for the homeowner. They have an option of, instead of paying 2.25% multiple on the home equity, they, instead of, that they end up paying some kind of a future upside value of Bitcoin to the preferred provider, right? So now you're essentially sharing, say, 20% of the upside with the future provider, because they were initially making most of the money on home equity gains, but now they're, making money on the Bitcoin upside. So your overall transaction mechanics goes, from a cost of capital point of view, goes lower. And in that case, the Bitcoin will not be under your self-custody, but it will be in a tri-party multisig where you can hold one of the keys. The Bitcoin is still legally yours, but you can't, unilaterally move the Bitcoin as you want. But as of today, if you, happen to have a contract with Horizon, you can move the Bitcoin to, whichever exchange, whichever hardware wallet, or whichever multisig provider you want.
Okay, yeah, I see. Yeah, because that's a point that I would think is naturally how this will go down. As you mentioned, at some point the preferred provider might grow to like this, and then he sees Bitcoin appreciating and he thinks well, the homeowner is getting all of the profits, and maybe I want to get a piece of the cake here as well. And so that could be a structure as well, where you give up some of the future value in Bitcoin as well to the preferred provider, and I guess maybe with you guys, it could be the same,
Yeah. And that is, generally speaking, a better sort of value proposition for someone who is new to Bitcoin. Someone who is a Bitcoiner who understands Bitcoin's value proposition, they would rather keep all the Bitcoin gains with themselves. But as we expand into the broader normie homeowner market, if they're getting into Bitcoin for the first time, they're actually happy to share some upside on the up. They're happy to share a fraction on the
Yeah.
upside for the risk of, having a lower cost of capital on the home equity side of things. So
Yeah.
that's the next product iteration we're working towards, and we'll be announcing it before the end of this year.
Okay.
And it's also great hardened Bitcoiners as well. I mean, a lot of the people that I've spoken to who may not necessarily qualify because of a really high mortgage balance, for example, people have actually, before I even mentioned that we're working on this type of product, they've asked me, hey, can I post my Bitcoin as collateral or give up upside? I really want to do this. And so even for hardcore Bitcoiners, they're more than willing to potentially, if they don't qualify, give up a portion of their Bitcoin proceeds to get those looser terms and actually just use the product. And so, I mean, there's no better feeling and there's no better validation that this product is coming right place, right time, and that it has great PMF than people actually giving you ideas and frankly asking you, pleading with you to be able to use the product. And we've also had homeowners who were not in their state quite yet, and they've actually, this is a legitimate example, he reached out to me and asked me if there are any materials about guidelines that I can send him so he can go to his state representative and ask to get this type of structure legalized. And so people really love and want this product, and it's just so amazing to see.
Yeah, that's exactly right. Yeah, amazing term that you throw out there, Smeet, the normie homeowner market. Sort of exactly, and my new favorite term. But about the market, that may be another question that I want to throw your way, Joe. How big is this market, and how much home equity is there to tap into? And then maybe for the Bitcoiners that are listening, like how much capital, home equity capital, can actually be unlocked and flow into Bitcoin, and what could that potentially do to Bitcoin's price? Any calculations that you've done on that front?
Absolutely. So Smeet had mentioned the $35 trillion number. I believe the latest is 35.1 or 34.9, but I do believe it's higher. So 35 roughly $trillion worth of US homeowner equity is sitting there, right? That's in the United States. Largely it's sitting there, not doing nothing, sitting idle. And that, of course, is resting in homes, which are, on net across the country on average appreciating 3% a year. If you consider home equity, right? Just if you just take an analogy and consider home equity to be liquid cash, if it could be mobilized tomorrow, homeowners essentially are choosing, now that this solution is available and now that other solutions are available similar to this, to rather than investing in an asset that's had a proven track record of being the best performing macro asset relative to the S&P, relative to REITs, relative to US Treasuries over the last 12 years, we actually include that figure on our website. They're instead choosing to essentially invest in an asset that's doing 3%. And so if you take that analogy and ultimately, like, every single homeowner, every single person is a capital allocator. You wake up every single day and you decide what to do with your time. That makes you a capital allocator. You work every day. Every 2 weeks, you get your paycheck and you decide what to do with that money. That makes you a capital allocator. But more than anything, the $35 trillion of home equity in the United States, and by extension, the homeowners that equity represents, they're choosing to allocate their capital for the most part straight into home equity, right? They're willing to sit in that. And Horizon really enables people to swap out of that. In terms of bigger numbers, like how big can this market truly be? Right now, the entire U.S. residential housing market is about $50 trillion in size, 50 to 52. I've done some research. I hope to publish the PDF today, if not on Monday. It's about an 18 or 20-page report that calculates the monetary premium in real estate more broadly. One of the things that Smeet said on stage in Vegas, and I've really been hammering since he said it, was that ultimately, what we're aiming to do, and this is kind of V1 on this much larger journey that we're going on, is to siphon the monetary premium out of real estate and into Bitcoin. Ultimately, the first version of this is allowing homeowners to do what is essentially a home equity swap into Bitcoin. But ultimately, if you run the numbers, I've done two different calculation methodologies on this, and we can get into them. Both have arrived at roughly a 34 to 35% monetary premium in the residential real estate market in the United States. If you extrapolate that out more broadly to the rest of the world, and let's say that exact same monetary premium exists in all kinds of real estate, global real estate being a $370 trillion market, ultimately what you're looking at is a $120 to $130 trillion monetary premium that exists in real estate. And when I say monetary premium, I mean a speculative premium that isn't tied to the bricks and mortar or the land that any type of building is sitting on, right? Whether it's residential or commercial or agricultural. And ultimately, this exists because, post 1971, monetary capital had to find a new home, right? Essentially, everybody had, as a result of detaching the dollar from the gold standard, was sprinting to park their monetary capital in some vehicle that was relatively scarce and could hold value over time. Many rushed to gold, but more than anything, people rushed to real estate. But real estate is an imperfect store of value. It requires maintenance. It requires, property taxes. I mean, my mother's home is like $1,000 or $1,200 in property taxes a month, which is insane. I know in areas like San Francisco, it's similar. You look at New England, you look at San Francisco, these places, home ownership and home equity represents the largest asset in a person's portfolio. But by the same token, it also represents an insane amount of monthly expenses and upkeep just to make sure that asset remains an asset, not a liability. The moment you stop paying, whether it's your mortgage or even once your mortgage is paid off, your property taxes, your other fees associated with it, that asset all of a sudden turns into a liability. It's an asset that is the people's largest asset that comes with a horde of liabilities in order to make sure that it stays an asset. And so ultimately, this is a massive market. Horizon is trying to pave the way to make this tool globally accessible and make this trade globally accessible, more accessible in the United States first and foremost, because this is the largest market for home equity globally. There's a tremendous amount of monetary premium. And on top of that, the fact that it's people's largest asset and it requires so many different liabilities just to make sure it stays an asset, the Bitcoin trade just makes more sense by the day. And this is just a massive market.
Yeah, and it's true. It's such an interesting point, because when I was preparing for this interview and going through your website, this is where it really clicked for me, because like you have usually heard these arguments like, yeah, there's like a huge monetary premium to real estate, as you just said, and this will be siphoned off and Bitcoin will sort of capture this. And I was always asking myself, like, how is this going to work? Because not everyone is just going to go at some point sell their house and put it all into Bitcoin, so that was always sort of struggling to understand it. But now that I see this is really this, monetary glitch here, and Horizon is part of this, like it's a way, it's a wealth, how it can really be siphoned off and how this transition can happen. So that's so fascinating. And I think we're only just in the early innings of this happening. But maybe my last question to you, Smeet, I know something like this must happen in the US, like financial innovation, even something financial sort of engineering. It's always starting in the US, I guess, but rest assured, I think it's coming to Europe if it's possible legally. And so you having worked for I think, European bank as well, can you talk to this? Is this possible outside of the US, maybe in Europe, in other places that stuff like this will be done as well with Bitcoin and housing?
Yeah, so we get a lot of inquiries from Canada, Europe, Australia, UK. Honestly, we would love to serve these markets. Having said that, US obviously remains the largest opportunity for us. We're all based in the US, so we want to like make sure that we are fairly large in the US before we go international. The problem with HEI or this kind of instrument is local regulations and local policies. So in the US, we are fairly comfortable working with state regulators, applying for licenses, working with preferred providers who have some of these licenses. So that ecosystem of real estate financing, broadly speaking, is very well developed and sophisticated in the United States. That's not necessarily true in other parts of the world. I'm not sure of each of the countries, but in several European countries, the mortgage is, for example, only 5 years long. So like there is no like 30-year fixed mortgage that we see in the US. But some of these structures, market structures, make it a little difficult for us to like sort of have a very concrete view on when we'll be going international. But theoretically, there exists demand because we do see empirical evidence of people applying from Canada, Australia, UK, Europe.
Yeah.
And to that extent, we're always, looking at some of these opportunities in the long term. But as of today, we don't really have an ETA on when we'll be live in Europe.
Yeah, I see. Okay, interesting. Well, I mean, I think we covered a lot of ground. That was just excellent. I don't know if you guys have anything to add, but I think for the time being, I got all my questions answered. And yeah, just thanks for all the insights and doing this. So I guess that's pretty also helpful and interesting for all the people listening. So anything that you want to throw in there as a close?
We're just starting off. Bitcoin is still at $115,000. That's pretty cheap. So if you're a homeowner, consider getting into it now. I think there is still a chance that if you're a US homeowner, you can stack up to 1 BTC through a product like Horizon. Yeah.
The product is live. So if I wanted to do this tomorrow, I'm from the US, I can do this.
We are live in about 16 or 17 states, but we are live in most of the larger sort of, Bitcoin-centric states. So yeah, if you're a homeowner in one of these states, reach out to us, reach out to Joe. We'll be happy to guide you through the process and help you become a Horizon customer.
Amazing. Yeah. Thanks, guys, for doing this. That was, as I said, really enlightening. And yeah, all the best and on to great success. So hope to have you on the pod later next year or something. And then hopefully you've grown already and you're siphoning off this capital into Bitcoin. So all the Bitcoiners, even the ones in Europe who maybe cannot do this personally, will profit as well. So
hey, maybe
it's
they'll
not a
move
zero-sum
to the
game.
United
Yeah.
States. Yeah. Maybe they'll move to the US and do it. Yeah.
Yes, exactly. Yeah. Cool. Yeah. Thank you, guys. And yes, enjoy the rest of your day. And I'll link to everything in the show notes. So for the people who are actually interested, they can check it out. And yeah, farewell. See you guys soon.
Thank you so much. Talk soon.
Thank you.